A question I often get from younger savers is how much should I have saved for retirement and how much have others saved? We like to benchmark against others. So what we're finding from a lot of recent studies is that younger savers typically are not saving quite enough for retirement. There seems to be this idea that there's a long time between now and the day I actually retire, and there's not a lot I can do about it, so why should I bother saving? As far as benchmarking, if you have about 1 times your annual salary saved by the time you're 30, you'll be on track. By the time you get to 40, that should be closer to 3 times your annual salary. The good thing is if you're behind at this point, don't fret too much. Because you're still young, you have a lot of time on your side, and you'll be able to, with some consistency of savings and with some diligence in putting aside even small amounts on a regular basis, you'll probably get to your goal. This younger time in your life is also a good opportunity for insurance reviews. Make sure that you're covered in case of any kind of catastrophic events that could derail your retirement. If you get those things down, you should be well prepared for retirement. So for those retirement savers between the ages of 35 and 55, we find these are really critical years. A career advancement, family situation typically allows for a little more money to be saved at this point. So that, coupled with the fact that you still have a lot of time towards retirement, before retirement, allows for us to really accelerate our savings. A good rule of thumb for this age group is that by the time you're 50, you should have roughly 6 times your annual salary saved for retirement. As you get closer to retirement, so for those age 55 plus, it's important that you watch your accounts really closely for volatility, proper allocation. A wild swing in the markets when you're 30 or 40 may not have a devastating impact on your ultimate retirement goal, but when you're in your 50s and 60s, it can have quite an impact. So it's important to look at that and consider shifting some of your assets to more conservative investments. Remember that even if you're 55 or 60, some of the money in your portfolio is still considered long-term money because you're hoping to live to 85 or 90 or 90 plus. And so some of that is long-term and needs to be allocated appropriately. A good rule of thumb for this age is by the time you're 65 to have roughly 10 times your annual salary saved. Studies have shown that retirement savings for Americans over the age of 55 is severely lacking. In fact, 29% in this demographic have no retirement savings whatsoever. 23% have a guaranteed income source like a pension, but also no retirement savings. So saving more, saving now, to help us get to that 10 times figure by the time we're age 65 will help you avoid this challenge.